What do you got going on? You got some pokers in the fire. I don't have.
Are you loving Chamath's tweet mogging that's been going on this week?
So good.
So good.
This clip from an episode of the All In podcast was recorded right in the middle of a 3-day Twitter feud that was centered around this billionaire fund manager.
Why is everyone so mad at Chamath? All he did was lose billions in retail investors' money by providing one-page SPACs. It's not like he then told them to enjoy their capital losses or anything. Give the man a break. Chamath's response, yes, I did.
All right, piling on.
This and his many other replies are responding to criticism for promoting a series of financial products that left many retail investors with eye-watering losses, while he walked away hundreds of millions of dollars richer. Some of these posts are so ridiculous, and the whole meltdown had a very bizarre ending, so I just had to take a deeper look. To be honest, I first thought there was no way I could make a whole damn video about this, until I remembered a quote from a Robert Greene TikTok that I saw once.
People have patterns of behavior. Nobody ever does anything once.
Polyhapatia burns down what he built. He's imploding.
Implode. No, I don't want to implode, sir. No, you don't.
Telling you a very hard, ugly truth, okay? Of all the things that I care about, yes, it is below my line.
The post that kicked all of this off was made on the 4th of March 2026. A tech startup founder tweeting that most tech podcasts are boring. The host is either some person who couldn't hack it in an operating role, or some VC who is just doing it to get deal flow. No one cares what Chamath thinks about politics. They want to hear what happened at Social Capital and why he closed the fund. This is a direct shot at Chamath Palihapitiya, who co-hosts the All In podcast alongside Jason Calacanis, David Sachs, and David Freiberg. The 4 VC investors cover everything from markets, economics, and politics, but as far as I can tell, they never explained Chamath's own controversy. What happened to his own firm, Social Capital? Back in 2024, he fired 2 of his senior partners in relation to one of his investment vehicles known as a SPAC. But all he said about it was, "We became aware of a situation." Chamath quote tweeted in response to the criticism, citing 3 explanations for what happened. A personal battle he was struggling with, that his internal team became a snake pit, and that his investing style didn't work for a normal fund structure. Long live Social Capital. While this gives a little bit more color around why he fired his partners, it says nothing about what people really wanted to know. A reply to Chamath reads, "How about all of the scams through your SPACs? You never came clean about it. Millions of customers lost money." To which he responded, "Bullshit." Another account replied, "It's not bullshit. I invested in all of them. Your pitches were compelling. I lost tons, you made tons. Why?" Chamath's response, "Then you generated capital losses. Did you use those yet?" So a very influential investor promotes and sells investment opportunities that lost some people a lot of money. And his response is, well, at least you can offset the losses on your tax next year. The exact same energy as Cathie Wood arguing that her violent investment losses are actually a good thing because they'll reduce her taxes when she eventually figures out how to generate a capital gain. This quote tweet is so good. His SPACs weren't scams, they were just capital loss acquisition vehicles. Clavs. Don't worry, I am going to explain the context around all of this, how Chamath made hundreds of millions of dollars while those following him experienced quite the opposite. But I had to first show you the start of this multi-day meltdown. I mean, he was replying to everyone, even this guy simply saying the podcast had lost its charm in recent years. Pipe down, buddy, didn't you notice that viewership is at an all-time high?
Number 1 rule of Wall Street. Nobody, I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in fucking circles.
I think Chamath Palihapitiya is best described as a man in the arena trying stuff. His major break came at Facebook in 2007, where he became vice president of user growth during some of the most important years for the company. He left Facebook in 2011, having earned a huge portion of his compensation in stock. Just a year later, Facebook stock went public at a $100 billion valuation, with Chamath's equity worth hundreds of millions of dollars. This was the springboard for launching Social Capital, his very own tech-focused investment firm. They made angel investments, such as getting in on the ground floor in Slack Technologies, buying Amazon stock in 2014, Tesla stock in 2015, and even Bitcoin way back in 2012, according to Chamath. By 2019, his fund had delivered returns that were twice that of the S&P 500. Investing large amounts of capital is hard enough, but venture capital is an absolute minefield. The companies are usually not profitable. Heck, many of them are even pre-revenue, which is just a fancy way of saying they have an interesting idea. And the angel investor has to live with themselves repeatedly setting fire to money on ideas that turn to dust, in the hope that one of them works and makes a return big enough to offset the losses. But that seems to suit Chamath's personality, trying a bunch of things and seeing which ones work and which ones don't. Battling people on Twitter also seems to be in his nature. In this thread from 2023, calling people victims, anonymous and afraid of their own shadows. He was having no bar of anyone suggesting that the SPACs he created were a scheme to extract money from unsophisticated investors. I'll explain what happened and you can be the judge. Starting with what on earth is a SPAC?
Name of the game? Move the money from your client's pocket into your pocket.
SPAC stands for Special Purpose Acquisition Company, and they're used as an alternative way for a private company to list on the stock exchange. First, someone like Chamath creates a shell company and lists it on the stock market. That's the SPAC. People invest in this shell company, and it uses the money to buy or merge with a private company. When the transaction has been completed, that private company has now become a publicly listed company without having to go through the traditional IPO process. SPACs are often referred to as blank check companies, because if you invest in a SPAC, you're effectively giving money to a sponsor who will then decide which private company to acquire and take public. The sponsor typically has 18 to 24 months to find a target, and if they can't, then the SPAC is liquidated and investors get their money back.
But if you can make a client's money at the same time, it's advantageous to everyone, correct?
No, fuck the clients. Your only responsibility is to put meat on the table.
Starting in 2017, Chamath became known as the SPAC King. He listed a shell company under the ticker IPOA and raised nearly $700 million from investors. In October of 2019, IPOA merged with Richard Branson's space tourism company, Virgin Galactic.
First half of next year is when we'll start to see the really ramping of customer flights, of revenue generating flights. We expect profitability in mid 2021.
In the lead up to the deal closing, Chamath made a number of forward-looking statements, including that they expect Virgin Galactic to be profitable by 2021. Now, when a company lists on the stock market through an IPO, this isn't allowed. But at the time, SPACs were kind of a loophole for this, allowing Chamath to make speculative projections in the marketing of the deal. From 2020, SPACs exploded in popularity on Wall Street. Chamath created IPOB and completed a $4.8 billion merger with the real estate platform Open Door Technologies.
Last year alone, they did $4.7 billion of revenue. And 2023, these guys will do almost $10 billion of revenue.
In January 2021, he creates IPOC and merged it with Clover Health.
And it is growing so fast that it will be an almost $600 billion market in just 5 years.
In May, IPOE merged with SoFi Technologies, a deal that valued SoFi at nearly $9 billion. At its peak, SPACs made up the majority of initial public offerings in the US. In March 2021 alone, $36 billion was raised for these blank check companies. And Chamath was printing money. Chamath structured his SPACs so that he would end up with a fixed percentage of equity, say 20%, in the acquired company. So even if the stock traded flat after the deal closed, Chamath could sell the shares for a considerable profit. That created a huge financial incentive for Chamath to make SPAC deals, even if it was a bad investment.
He thinks he's getting shit rich, which he is, on paper. But you and me, the brokers, we're taking home cold hard cash via commission, motherfucker.
In late 2020, Chamath was already selling shares in his Virgin Galactic SPAC. Taking profits in the deal he inked just 18 months earlier. Anyone who bought into the SPAC and held on is down 99%. Chamath's second SPAC was also down 99%, although it's partially recovered recently. IPO-C is down more than 80%. IPO-E is up, but only marginally in the 5 years since the deal. In contrast, Chamath says his company made about $750 million from sponsoring SPAC deals, roughly doubling its money. He faced a lot of backlash for this asymmetry, with lots of individual investors arguing that Chamath basically stole their money, that he leveraged his reputation as a successful venture capitalist to trick his followers into investments that he had no intention of sticking around in. One investor in the Virgin Galactic SPAC said, "I bought SPCE, you sold, now I am a bag holder and I lost everything." To which Chamath responded, "Why did you not sell when I sold?" I'm in the arena trying stuff. Some will work, some won't, but always learning. You're anonymous and afraid of your own shadow. Enjoy the sidelines. My personal take is that these SPAC offerings were pretty obviously going to be a bad deal for investors. You're investing in speculative companies that are unprofitable and paying a ridiculous price for it. But that's not obvious to everyone, especially for newer investors. The structure of these deals are incredibly complex, so unless you can read this prospectus and honestly say you understand what all of it means, just stay away from it. And to get back to the recent Twitter meltdown, Chamath agrees. Retail investors should stay far away from every investment I make from now on. Forever. You do you.
You will fall out of balance, split your differential, and tip the f*** over. Or worse yet, I've seen this happen, implode.
No, I don't want to implode, sir.
No, you don't.
Matthew Carroll followed up on the thread by saying, "Glad you're going on the record for that. I got crushed and took losses because of your SPAC calls." To which Chamath replied, "Post your tax return here showing the capital loss, and I will reimburse your losses." I couldn't find any follow-ups about Chamath actually covering this guy's losses, and I'm pretty sure he was just rage-baiting Chamath anyway. But there is another thread where Chamath actually did put his money where his mouth is. In June 2025, Chamath tweeted a photo of his new wine collection, to which David responded, "Glad to see my SPAC losses put to good use." Chamath replied, "Send me copies of your statements showing your exact losses and a legal affidavit, and I will consider reimbursing you." A user by the name Parabolic took Chamath up on his offer. "Please DM me on how you'd like me to send over the docs." Chamath responded, "Post them." Publicly? Here? Show us this isn't a lie. So Parabolic did, posting proof of his SPAC investments. A post that Chamath was apparently hiding. "I get called out in public, prove my losses, proof gets hidden." As recently as February this year, Chamath had not made good on his promise. He has been in touch with me, mentioned a Zoom call in January that did not end up happening. I'm sure he is very busy. But finally, on March 6th, Parabolic provided an update. He first took responsibility for the losses in SPACs, followed by complimenting Chamath. "I respect what he has built, and I've been listening to the All In pod for a long time." This was a complete 180 from the harsh criticism Parabolic had leveled at Chamath for almost a year now. Tweet 6 explains why. "I am extremely grateful for the very generous contribution he made to his daughter's college funds. That gesture means a great deal to my family." Chamath retweeted the thread stating, "This guy clapped at me, I clapped back. We then spoke, so I funded his 2 daughters' college accounts. Hope the kids become better investors than their dad." A lot of people were left wondering why Parabolic's thread wasn't marked as a sponsored post, because it sure does come across that way. Also, this video isn't meant to be a hit piece or anything. Honestly, I just found the tweets kind of funny. These videos on screen are more of the same, in case you haven't finished eating yet, and thanks for watching.